All right, we'll kick things off. Hopefully, we will have a few more people joining in. Good evening, everyone. Welcome to the second session of the Capital Conviction webinar series. I'm Shabrish Menon, Managing Principal of Phenomenon Investments and your host today. Thank you for making time on this evening to join us. Capital Conviction webinar is treated as one simple reason to cut through the noise and bring fact-based, no-hype insights into the most important capital allocation decisions investors take when planning investments. These are critical for personal success, whether you're building wealth for your family, looking for passive income, or just sharpening your due diligence process. This series is designed to help you approach capital allocation decisions with clarity and high conviction. For those new to Phenomenon, we are a family-only registered investment advisor based here in Washington, and we are built on the principle of transparency and client obsession. We serve corporate managers and executives as family offices, providing personalized, comprehensive advice over equity compensation, investment strategy, and taxation planning. Now, I'm thrilled to welcome our guest today, Edsel Montefar, licensed insurance agent and founder owner of Mia Insurance. He is an independent insurance. He owns an independent insurance agency based here in Washington. Mia Insurance specializes in customized personal coverage across life, disability, long-term care, and designed to grow with the financial goals and family needs. Their approach is grounded in education, independence, and long-term client relationships. Mia is also a listed partner on the Phenomenon Family Office Network. Edsel brings nearly a decade of experience in the insurance industry, along with a degree in international business. He works closely with individuals and families to build personalized insurance strategies that align with your long-term goals. Today, he will walk us through how to think about insurance as a planning tool and how to evaluate your coverage through the lens of risk management and financial clarity. After he walks us through the presentation, we will have a Q&A, so feel free to note your questions along the way and we can take them later. This webinar recording would also be available following this webinar today. So with that, I will pass it over to Edsel for the presentation.
Awesome. Thank you. Thank you, Shabrish. Thank you for that introduction. Yes, good evening, everyone. Thank you for being here today. My name is Edsel Montefar, founder of Mia Insurance. Today, we're not just talking about insurance policies. We're talking about peace of mind, strategic planning, and how to truly protect what matters the most. So I'm going to go ahead and share my screen here.
Thank you, Edsel. It'll be great if you can come on video as well so that you are visible in the recording and the audio.
Perfect. Let me know if my camera is working here. Great. Awesome. So yes, good evening, everyone again. So today we're going to be talking about insurance policies. We're talking about peace of mind, strategic planning, and how to truly protect what matters to you the most. How to protect what truly matters the most to you and your future. Our goal is to show how Mia Insurance is built as your dedicated partner in navigating complexities of insurance, ensuring you're always covered, and no matter what life throws at you. At Mia Insurance, my name is Ethel, and I've been in the insurance industry for over 20 years, over 16 years. What really truly sets us apart is our commitment to ensuring you're always protected. This is not a one and done transaction. It's an ongoing relationship built on trust and diligence. Our strength is amplified by our extensive network of over 60 carriers. This isn't just a number. It just means we have the flexibility to reach and compare options and find the absolute best coverage at competitive prices. We're not just tied to one company, we're tied to your best interests. This is a vast network that allows us to be truly independent, unbiased, and focus solely on finding the perfect fit for your unique situation. So why are we your insurance headquarters? Because we're designed to be your central point of all your insurance needs. As an independent insurance agency, we're built for a diverse range of clients. Families looking to secure their future, business owners safeguarding their livelihoods, real estate investors protecting their assets, and professionals managing their unique risks. We understand that each of these groups has distinct needs, and we pride ourselves in providing customized solutions, not generic packages. Our mission at MIA Insurance, we're on a crusade to put clients first, advocating fiercely, protecting fully, and building trust one policy at a time. Um, Building trust one policy at a time. This means that we are here to earn your trust through consistent and transparent dedicated service. Every interaction, every policy is an opportunity for us to reinforce that trust. This mission underpins everything we do, from our initial consultation to our ongoing policy management. Too often, insurance is seen as a necessary evil. Something you get for just in case. But here at Mia Insurance, we believe it's much more than that. We see insurance as a fundamental planning tool that is part of your financial strategy. It's about building a resilient future, not just reacting to problems. It's about proactively safeguarding your assets, your income, your legacy, and allowing you to pursue your goals with confidence. Let's break down how insurance acts as a powerful planning tool across different aspects of your lives. Wealth preservation. This is foundational. Policies like life, long-term care, property and casualty, which would be your personal lines like home and auto or business insurance, and an umbrella insurance are designed to protect the wealth you've accumulated from unexpected losses, ensuring your financial stability remains intact. Legacy and estate planning. Life insurance in particular is a cornerstone here. While trusts aren't insurance, they work seamlessly with life insurance to ensure your assets are distributed accordingly to your wishes, providing financial security for your future generations and minimizing state taxes. Income and liability protection. Your income is your most valuable asset. Disability insurance protects that income if there's an illness or an injury that prevents you from working. And personal and commercial liability limits and shields you from potentially devastating lawsuits, protecting your assets from claims. Risk mitigation. At its core, insurance is about transferring financial risks. Instead of bearing the full burden of a major loss yourself, you transfer that risk to a company like an insurance company, which prevents significant financial setbacks for both individual and businesses, allowing you to recover and rebuild without financial ruin. Think of it as a protective financial layer that allows you to take calculated risk in life and business, knowing you have a safety net. To provide this comprehensive protection, we offer what we call your MIA toolkit. These are specific types of insurance that address different facets of your life and assets. First, let's talk about where you live. Your home is often your largest asset and your sanctuary. Home insurance. We do this through home insurance. This covers your primary residence, protecting it from perils like fire, theft, and natural disasters. We specialize in insuring even high replacement value homes to make sure that they have adequate coverage as well. And investment property insurance. For real estate investors or for people that have multiple properties, the standard home policies won't suffice. We provide custom policies for rentals, multifamily dwellings, and commercial holdings, addressing the specific risks associated with generating income from your property. Next is for what you've built. Your business, whether it's whether it's a small startup or a growing enterprise, your business needs protection. Commercial insurance safeguards your businesses from a wide variety of risks, including property damage to your premise and equipment, lawsuits from customers and employees, and potential risks that could disrupt your revenue stream. It's essential for making sure that your business is protected. And perhaps the most important category is for who you love, your family, and your ability to provide for them. Life insurance, which is a cornerstone of protecting your family's security, ensures that if you're no longer here, your loved ones receive a financial payout to cover expenses like debts and future needs, maintaining their lifestyle and securing their future. Disability insurance. This protects your income. If an illness or an injury prevents you from working, disability insurance provides a portion of your lost income, allowing you to focus on your recovery without the added stress of financial hardship. Long-term care, long-term care insurance. As we age, we need assisted living or home care needs often arise. This type of insurance helps pay for those significant costs, so preventing you from draining your life savings and burdening your family. It's about preserving your financial independence in your later years. Now let's address a critical area, which is common gaps in coverage. Many people believe that they're fully protected, but often there are blind spots. Your standard auto and home policy might have limits that are too low. If you're involved in a major accident or someone is injured on your property, you could be held liable for damages that exceed your policy limit. An umbrella policy can provide crucial additional layers of liability protection. Underinsured motorist coverage. This is vital. What happens if you're hit by somebody who doesn't have insurance or enough insurance to cover damages to you or your property? Underinsured motorist coverage protects you in that scenario. And extended replacement cost coverage. A lot of homes are usually protected to a certain limit, but that limit might not be enough when a loss occurs. Making sure that you have extended coverage protection on your policy ensures that you have enough coverage to rebuild your home in case there is a total loss. There's also auto gap coverage. If your car is totaled, your standard auto policy pays the market value, which can be less than what you owe on your loan, especially early in the loan term. Gap coverage bridges that gap, preventing you from being upside down on a total vehicle. And then property exclusions. Many policies have specific exclusions like flood and earthquake, which are not typically found on your home policy. These have to be indoors, or a new policy has to be on top of it in order for those exclusions to be covered under your policy. And then as we discussed before, disability, long-term care, and life are often overlooked, yet they're foundational for protecting your income and your future well-being. Our goal is to help you identify and address these potential gaps before they become a costly problem. This slide reinforces one of our greatest strengths, which is our 60+ carrier network. Why is this important? Because it means we are truly independent and unbiased. We're not pushing products from a single carrier. Our allegiance is to you. We leverage this vast network to find the best policies with the best terms that align with your specific needs and budgets. It's about choice and finding an optimal solution, not just any solution. Your life is dynamic, and your insurance needs should be too. What's right for you today might not be right for you in the future. We tailor protection for every stage, whether you're starting out and need basic auto and renter's insurance, or you're part of a growing family needing life insurance and comprehensive home coverage. As you begin to build your legacy, we help with more complex planning, including umbrella policies and specialized asset protection. And for pre-retirees, we focus on preserving wealth, long-term care, and estate planning. Our approach is always personalized, ensuring your coverage evolves with your life. This brings us to our core, to one of our core, the way we operate, which is our mission control process. It's not enough to just set up a policy. We believe in proactive management, continuously tracking your policies and ensuring you remain protected as your life changes. As a Phenomenon investment preferred vendor, MIA Insurance is committed to providing expert personalized advice across all insurance needs. Protective core management. This means that we don't wait for you to call us. We review your policies periodically to ensure that it still fits your current needs, especially after significant life events like buying a new home, having a child, or a career change. Clear, no jargon insurance. We understand insurance can be confusing. We break down complex terms and ensure that you know exactly what you're paying for without confusing industry jargon. Fierce client advocacy. This is a promise. We are truly in your corner. When claims arises or you have a dispute, we fight for you, not the insurance companies. Our loyalty is to our clients. Tech-driven, human focus. We leverage technology for efficiency and seamless support, but never at the expense of personal connection. You always have a human expert to talk to, ensuring fast solutions and personalized advice. To make this insurance simple and effective for you, we follow a clear 4-step process. Step number 1 is mission brief. This is when we assess your needs and map out your risk and come up with a plan. And we assess your risk and map out your risks. And then our step 2 is strategic plan. Once we have a clear picture, we develop a strategic plan, leveraging our network. And leveraging our network, we identify the best protection options for you, comparing policies and rates to get the optimal coverage at a competitive price. Activation. This is where we put your plan into action. We handle all the paperwork, the applications, and the follow-ups, and we lock in your coverage, making the entire process as hassle-free as possible. And then step 4 is mission control. This is our ongoing commitment. We don't just disappear after we put your policy in place. Through mission control, we continually track your policies, monitoring changes in the market, and proactively reaching out to you to ensure your coverage remains perfectly aligned with your evolving needs. But don't just take our word for it. The best estimates come from our clients themselves. Here are just a few examples of what people are saying about their experience with me in insurance. So how can you start building trust with me Insurance? It's simple. Just give us a call. You can contact us through email, through phone. You can also text us if that's easier for you. We try to make it as easy as possible for you to reach us through various forms of contacting us. Thanks, everyone. That's all I got for you guys today. I think you're on mute, Chibrish. Sorry.
Oh, sorry. Thank you. Appreciate the presentation. How long was that in terms of the slides? Thank you for putting all this together.
Thank you. Appreciate it. Sorry if I'm a little nervous, guys. I'm usually shy on camera, so.
It's okay. So I think this is where the Q&A will help, and you can get off the screen share so that people can see you more.
Perfect.
Okay.
Perfect.
So I think we have a few people. Thank you for joining. If you have questions, feel free to put them here in the Q&A box. But we have some moderated questions as well that we had collected through a poll. So let's just maybe dive into some of those itself. So what is the role of insurance in a long-term plan in terms of the risk management part, especially when you think about higher net worth clients, like 4 million, 3 million upwards? There is a tendency of having coverage gaps because they're exposed on the liability side, and then naturally they don't fully understand in terms of whether the coverage they're getting from, let's say, their employer is enough. So
Right.
what would be your perspective on the kind of role insurance truly has in terms of risk management and protection for high net worth clients?
Well, to address the first part about having adequate coverage for your home, especially, homes typically, most companies have this kind of cookie cutter coverage where they try to fit everything into a specific policy, right? And that's how most policies or most carriers operate. When you think of your typical Progressive and Safeco and carriers like that, State Farms, where they try to fit most of the products into, or most risks into, one product. But when you start getting into homes that have a high value replacement cost, and by that I mean not the market value of your home, right? Insurance policies or insurance companies are always going to insure the replacement value of the home, meaning how much will it cost for the insurance company to rebuild your home if there's a total loss, like a fire. And so for homes that get to 1.5 million and above, we're dealing with a whole different type of home builds, right? It's usually custom homes. They have custom features, bigger in size. And so there's specific policies for those. We can go through companies like Chubb or Pure that specialize in policies for those specific types of homes. And they know that typically if it's a high net worth individual, they have more things that are at risk, right? And so they give you automatically usually higher liability limits. They give you guaranteed replacement costs or agreed value on your home. And basically what that means, guaranteed replacement costs, is they guarantee to replace your home no matter the cost, or agreed
Mm.
valued, where they will agree to insure the home at a certain value. And then if there is a total loss, they will give you that payout so that you can either pay off your loan and move somewhere else if you don't want to rebuild there, or use the money yourself and then rebuild where you were. And then as far as the gap coverage on your life for life insurance, we find that there's usually a gap between your liabilities and your current employer coverage, right? So let's say you have a home and you have a mortgage on it that's still 600K, and then there might be like another 200 in other liabilities and other debts, like a home loan, or I'm sorry, an auto loan, credit cards, and what else. There especially if there are multiple homes. And so usually we find that there's a gap between how much life insurance you usually have from your employer and how much you actually need to cover those liabilities, right? Because the purpose of life insurance is to make sure that if something happens, the worst happens, is that you're not leaving your family with a debt, right? You want at least your liabilities paid so that your family has the ability to reassess their current needs, pay off those debts, and not be burdened with the debt that that otherwise they would have to pay themselves. So.
Hmm. Okay, that makes sense. And in terms of like in the market, if you look at many of the individuals and families that we are talking about here, um, there is a tendency in terms of understanding what's the best way to go and scout the market. Like, should they be talking to like individual agents, like from State Farm or Progressive or Providence, or is it better to go with somebody who's agnostic and who's able to compare the benefits and the costs?
Yeah.
Like, what's the right approach? Because the reason I'm asking that is a lot of times our clients would ask, and I'm sure a lot of the people in the audience would also think that there is a huge amount of sales push that generally gets this industry a little bit of a bad reputation, right?
Hmm.
So how do you can you share some insights there in terms of how should customers think about? Because insurance is key, seems like it's a very key aspect of a healthy finance and wealth building,
Yeah.
and in terms of risk protection and management. But seems like there is not much clarity in terms of how do you go about engaging with the market.
Right, right. The thing about insurance is nobody thinks about insurance until they actually need insurance, right? And so it's not until there's a loss, that people will find out like, oh man, my policy didn't have coverage for water damage, for example. Now my sink is backing out and it flooded the downstairs floor as well, and now I have to come up with that coverage, right? Or now I have to come up with that to cover those expenses. So there's a difference between shopping for a rate and shopping for coverage, right? And even with my clients, whenever they're shopping around, and they'll tell me, well, I have a few other um, I want to go shop this around and see if I can get a better rate. And my answer is
Hmm.
always like, yeah, shop around. Here are the coverages that this policy provides, right? And then we go through the coverages that the policy has. If you're shopping around, make sure you're comparing the coverages as well, right? Because it's one thing to compare the rate, and it's another thing to compare the coverage, right? So you might get a premium from carrier A that's $2,500, and you might get a premium from carrier B that's $1,800, right? And so there's a difference there of a few $100. But if you actually take a look at the policy, there you can find the differences in the coverages, right? And a lot of those gaps are usually not there, like extended replacement costs, water coverage. There's a thing called ordinance and law. So if you have an older home, there's usually new codes by the city or the county or the state on new building codes, right? Windows have to be bigger, doors have to be bigger as well. That's usually excluded on your policy unless you specifically endorse it. And so if there is a loss and the windows have to be replaced because it's not up to code anymore, then you're usually on the hook for that. So yeah, I always suggest to my clients, shop around, take a look at it, but don't just look at the price. When you're shopping around with other carriers, make sure you're also comparing the coverage as well. And I think that's the difference between an agency that's pushing a product and an agency that's offering advice.
Okay, there are two questions. I know we are right on top of the hour, so we'll just quickly address these questions if you can.
Mhm.
It's from Nihal Jain. He asks for additional real estate beyond primary home and secondary home, say land. You mentioned about creating a customized policy. Can you explain a little bit more about that? This can be covered with umbrellas, so wondering what more is needed and what does this policy called or covered?
Yeah. So when it comes to investment properties, and this is going to be an investment property, there are several types of investment property policies that you can add, right? The most common one, if you're renting it out, is called a landlord policy. And so that's if you're renting out the policy. And then there are two different subcategories within that. There's a traditional landlord policy, which is for homes that are rented out for 6 months or longer. And then
Mhm.
there's a short-term policy if you're renting it out, say, on Airbnb. Beyond that, there are also other investment policies. For example, if the dwelling is vacant, right? Maybe it's vacant because you have future plans for it. Maybe you're going to tear it down, right? So we would need a vacant policy for that because nobody's living there. Or maybe it's land, right? Or maybe you're going to build something else and you're in the process of rehabbing it or new construction, and so you would need a builder's risk policy for that. That would also insure the material that you have there as well. So if somebody comes in and steals the material, that would be covered as well. And so, yeah, there are different policies for every type of investment strategy out there, whether it's long-term rentals or short-term rentals, or if you're planning on rehabbing the policies like a fix and flip or new construction.
Okay, got it. And I'm sorry I mistook this as a 60-minute webinar. It is 90 minutes, so we still have time. If you have more questions, feel free to put them. There is another question by Nihal, the follow-up. Auto gap insurance, is it a separate policy or an addendum on an existing auto insurance policy?
Yeah. It's just an
Looks
amendment.
like for the old car where replacement value would be lesser compared to buying a new car. Like, how would you think about that?
Correct, correct. Yeah, and most insurance companies will only allow you to add gap coverage if it's a new vehicle that you're purchasing. It's if it's an older vehicle, they usually don't, and you have, if you want gap coverage, then you usually have to go through the dealership. But if it's a new vehicle and you're purchasing it brand new, you can put it on it's just an amendment that goes on your auto policy, and it's usually like a fraction of the price of what the dealership would charge you. Usually you pay an extra $60 on your auto policy per year or per term versus it might cost you like 1,000 or two through the dealership. But yeah, it's usually they're usually restricted to new vehicles, new purchase vehicles.
Got it. Okay. All right. So the next question is long-term care. I think this is definitely a topic everybody wants to talk about because I remember when I was in Amazon as well, this news came around mandatory Washington care, which was going to be a deduction from the paycheck. A lot of people got the policies, a lot of people didn't. And then
Mhm.
since then, I think there has been more widespread adoption in terms of the long-term care, which happens through the payroll deduction. But can you speak to in terms of what do they really get from it? Since most of us would have that, what do they exactly get? And then in terms of long-term care in general, as far as insurance and risk is concerned, where how should people think about it?
Well, when you think about it, okay, so long-term care insurance, you know, most people don't think about our future, right? We're young, we're working. We don't think about, how we're going to be living in our later on in our years. The fact is that if most people end up in assisted living homes or nursing homes, and that comes at a price, right? I believe that in Bellevue, if you want a private room, the average price of a private room is about $14,000 per month. And same in Washington. If you want a semi-private, you might pay like $8,000 a month, right? But that's a significant chunk, right? And so that's what long-term care insurance takes care of, right? It takes care of your housing needs later on in your years when you need them, so that you're not having to drain your family's your family's fortune, right? And so you're not having to pay that out of your pocket. And so long-term care is really just meant to make sure that you get that you are able to live your later years with quality, at the same time not burdening your family. So, I mean, there's not much there's not much to it besides making sure that you're not burdening your family at your later years. And like I said, it's something that we all think to overlook. We all seem to overlook, but it's a fact of life that later on we're all going to be in we're all going to be in need and might need a little bit of help. And it's just making sure that your family isn't going to have to deal with that later on.
Got it. And so what does one get when it comes to the Washington care that the government provides here? Like, do you have any ideas around what does that provide in long-term care to the residents of Washington?
So long-term care, it's going to provide you just that. So it's going to provide you. It's usually going to pay for your stay, and then and it might cover medical needs as well, like transportation and things like that. I mean, and each policy can be addressed to specific levels, right? So
Mm,
you're going to want, whether you're going to want like a more comprehensive policy that's going to give you that private room, maybe more personalized care than a different policy that might just have cover you for part of the cost, for example.
mm.
But as far as the insurance carriers, they're usually able to put a policy together that fits within your budget as well. And so, but yeah, I mean, as far as what it typically covers, the main part is going to be the ability for you to afford a place like that. So the rent and the nursing care the costs that come along with that.
Yeah, like nursing care would be eligibility based on like if you're not able to perform daily activities, right? Like
Correct. Yeah.
bathing, moving, walking.
Correct. There's
Uh,
usually three. If you can't do two of three activities, whether it's bathing, moving, and I forgot the other one, but if you can't do two of the three, then you qualify for long-term care, and that's usually the kicker. That's usually what
mm,
activates your policy.
got it. Okay. Cool. Moving on to the next question. So, what are the biggest myths people typically have about insurance? Any common advice you would give in terms of assumptions that deserve some scrutiny?
Well, the biggest one is I don't need life insurance or disability or long-term care insurance, right? But
Mm,
the reality is that you typically do, and when we're young, like I was saying, the usually people start thinking about this when they're later on in their years, and that's when you become ineligible, or it's a lot more expensive to get there in your younger years. And so that would be the myth number one. Myth number two is that my insurance covers everything, but health insurance doesn't cover long-term care, right? And it doesn't replace your income like disability insurance would. Also, like PIP or personal injury protection on your auto policy. If you have a high deductible on your medical insurance, personal injury protection on your auto policy can cover the first $10,000 or $35,000 worth of medical coverage. So a lot of people think I have good coverage to medical insurance, but so I don't need medical insurance on my auto. We typically tend to find that most people have a higher deductible, and so you're going to be paying out of pocket for that medical attention for the first few $1,000s. And so personal injury protection can take care of that. And then underinsured motorists, I don't need underinsured motorists, I usually hear, but most people don't even know what that coverage is, which basically is if you're hit by somebody who doesn't have an insurance or enough insurance to cover you if you're physically hurt or your vehicle. The the minimum liability requirement in the state of Washington for for auto insurance is $10,000 for property damage. That means that you can get away with having insurance with the minimum coverage of 25,000/50,000 for bodily injury and only 10,000 for property damage. Most of us are driving around in a vehicle that's worth more than 10,000, right? And so if you're hit by somebody who has that limit, underinsured motorists will will cover that vehicle or damages to you physically as well. And so, and given the fact that about 30% of the population in Washington don't have insurance, it's definitely a good coverage to have. Let's see, myth number 3 would be my personal auto and home policy covers my business and rental property. It doesn't. You know, your business insurance is not going to be, or your business exposures, especially if you have like an office business, is not going to cover any of your business claims or any of your business risks, right? So you need special policy for that, which is usually at least a general liability policy to cover you against lawsuits. And let's see, what's another one? Myth number 4 is, I would say, is most people think that their regular homeowners policy might cover their high value home. And like like I said earlier, you know, usually a high value home, most policies or most carriers or most standard carriers are not fit to cover homes that are that have a replacement value of 1.5 million or more. And then
So
and then
maybe
myth,
that's a good segue into
yep,
the question that is related to what you just said. So in the home insurance context, a lot of people see their statements of the policy coverage
mm-hmm,
and they read the constituents of what makes up the home insurance, right? And typically you see the largest constituent of that is the dwelling coverage.
right,
But if you compare that to the value of the market, there is usually a huge amount of variance.
right.
And I have seen like sometimes, uh, there are many reasons for it in terms of why the only dwelling is coverage. But can you explain to our audience in terms of how can they increase that in terms of the replacement cost aspect that you just touched on?
Got it. Yeah. Yeah, so insurance companies, like I said, they're always going to insure the replacement value of the home. And a lot of people say, like, wait a minute, I bought this house for, $1 million. I'm only getting coverage for 500K. It doesn't make sense. There's a gap in coverage, and it's not. When we first issue, or when we're going through the process of reviewing your policy, we go through a replacement cost estimate. So we take a look at the property, its size, what kind of materials it's built with, right? Whether it has marble countertops and solid wood floors, or if it's laminate, hollow doors versus versus non-hollow doors, and things like that. Does it have a special feature, like maybe it has a wine cellar, right? And so we take those we take that information and we put it into a replacement cost estimate, and each company has their own, and they come up with a replacement cost estimate. It's not always exact, but it's usually pretty close. And so that's the dwelling limit that you see on your policy. It's the replacement cost estimate of your home. How much is it going to cost for us to rebuild your home if there's a total loss? And so, and I think that's why a lot of people think that there's usually a gap in coverage, because insurance companies are not going to insure the market value. One, it's not allowed. The insurance commissioner doesn't allow us, because it can lead to underinsurance or overinsurance. So you're either going to be underinsured, or you're going to be paying too much if we do it that way.
Got
And
it. So with
so,
the replacement cost, then how much does that value become? Like, is it 100%,
yeah,
120%?
yeah. And it depends on the carrier. So usually the minimum extended replacement cost endorsement is 25%. So let's say your home, and we'll just make simple math here. Let's say your home has a replacement value of $1 million, right? At 25%, you can add a 25% extended replacement cost, which will cover your home for an additional 250,000, right? So now you're up to 1.2 million. So if your estimate is at $1 million, you have an extra 250,000 million, an extra $250,000 to make sure that the home is built, to the standards, and it can go all the way up to 100%, right? So we can double that coverage. So it can go up to $2 million should you need it. And then there are for the high value replacement cost homes, they usually do like Pure and Chubb, they'll do what's called guaranteed replacement cost or agreed value on your home. And just like I said earlier, they'll guarantee to replace your home no matter the cost, or they'll give you the agreed value of the policy. So let's say the replacement cost is 1 million and the agreed value is 1.8. If in the event of a total loss, they're willing to give you 1.8 million for you to do whatever you want, whether you want to relocate or rebuild there.
Got it. Okay. Cool. Thank you. So next question is on the term and cash value insurance. So in terms of the whole sales narrative of the part that you touched on in terms of the independence that you bring as a insurance agency, a lot of the mis-selling that happens in the market as far as insurance is concerned is around cash value insurances, I believe.
Mm-hmm.
And I have personally seen a lot of people falling victim to policies where there is a huge upfront cost, lock-in, and abysmal investment returns on the separate accounts that are managed under this dual insurances.
Right.
So I believe those cash value insurances typically don't do a good job of neither protecting nor investing.
Right.
Whereas, so just to kind of speak about it in terms of how do you think about when can these policies actually make sense?
Right.
And then why term insurance is kind of the gold standard as far as risk transfer is concerned.
Yeah, well, typically we see that, on these whole policies, they don't really give you that return that they usually promise, or the return is usually less than how the market performs, right? And so we typically see that it's a lot more effective to buy term insurance for your current situation and then invest the difference, right? Because a whole
Mm,
life policy can be very, very expensive. I mean, we get policies that's, they can start out at like $10,000 a year. And it's a significant portion of your income if you're investing that much into a life insurance policy. And what a lot of people don't realize is that this cash value component of it doesn't allow you to tap into it until later on in the policy, right? And so we get a lot of we get a lot of people saying like, hey, I want to use this, index life insurance policy so I can be my own bank, right? And I want to take loans out of it so I can purchase my own, purchase things and then repay it back or not have to repay it back. But we find that it doesn't really work that way. Most policies, the way they're set up, you don't have any cash you don't have any cash component to it until years 7 to 10, right? And so
mm,
you're locked into this policy for 7 to 10 years without being able to do anything and locked in with those premiums. And if you forfeit it, then you forfeit everything that you paid for it, and most of what you paid for already, right? Because usually the break-even point is at about the 7-year or 10th year. So if you cancel it before, then you might even end up owing a little bit of premium on the policy. So we usually find that it's better to buy term policy for your current needs and then invest the difference in other vehicles like in ETFs or whatever it might be, CDs.
got it. Okay. Thanks for sharing that. Okay, so I guess the next question is around any ideas or inputs you could share in terms of what could be the tools that are available for any families who have higher net worth in terms of like umbrella policy that you obviously spoke of, but have you seen in the market any specific types of insurances that are more useful for somebody, let's say, north of 5 million in net worth, and how they could be using it differently than, let's say, most people think about?
Yeah, well, really, if you're a high net worth individual, then usually the best tool is to shop with high net worth carriers, right? And like I said, usually like your Chubb, your Pure insurance, they're usually able to cater a lot more, and they have higher liability limits than what a standard carrier would offer, right? Most standard carriers will top out of maybe a million, maybe 2 million. Some will go up to 4 or 5, but but they don't give you they don't give you the same type of coverage that a Chubb policy or a Pure policy would give you, right? I'll give you an example. I just wrote a policy for a couple down in Bellevue, and they and we wrote a pure policy. Well, that pure policy gave him agreed value on their home, and then also gave him agreed value on their vehicles as well, right? So if there is a loss on their vehicles and their cars are totaled, the insurance company isn't just going to give them the depreciated value of of the vehicle. They're going to give them the agreed value of the card as well, right? So you can insure your vehicles that way, and they have the ability to go up much higher in liability limits. And so the rule of thumb is usually to have liability limits that are equal to your net worth, right? So once you take all your liabilities away, whatever your net worth is, let's say if it's my $5 million, then typically you want to have liability limits that equal that amount, right? And the
Mm.
nice thing about having an umbrella policy is that it also covers other policies, not just your home, not just your auto. They go on top of your rental policies as well. So if you have investment properties, if you have water, like if you have a boat or a
Mm.
yacht or things like that, then that umbrella policy would go on top of those limits also. So if something happens, whether you're on a boat, a recreational vehicle, at home, investment property, that umbrella policy, if those sublimits are exhausted, would kick in and provide extra protection as well.
Got it. And in terms of like like on the business side, we see key personal insurances, right? Where you
Hmm.
could protect the income if your business is reliant on somebody who's like key to the operations of the business
Right.
itself. I think doctors have certain types of insurances because they do surgeries. So, are there examples where such policies also exist for covering such nuanced professions and occupations?
Yeah, yeah. So key person insurance is key if you have, especially if you have partners, right? And the way key person insurance works is let's say you have a business and they rely on one surgeon, right? Or a partner is a key component of that business, right? So what happens if something happens to them, they're unable to perform, they're
Mm.
unable to, or maybe they have an agreement where if something does happen, right? Maybe your agreement with the other partners is if you pass away, they're going to buy out that portion of that portion of your business, right? And so what key life or key person insurance does is that it provides those funds in case something happens to that partner, right? And it gives the business the ability to be more flexible in case of a loss like that, right? So you're able to use that liability policy to to either buy out that partner's portion in the business, right, and pay it to the
Mm.
family so that the business gets transferred to the remaining partners, or two, those portions can be used to look for new talent, right? So you don't have to dig into the company's funds in order to hire a new client and bring somebody new. You can use those funds to look for somebody else and get that same kind of talent or something close to it as well. And what a lot of people don't think about too is disability insurance can cover here too, right? So disability insurance, and this goes more on the personal side for your family. Let's say you are that surgeon, right, and you use your hands to operate. Well, a lot of people don't think about it. And I'll give you an example. We had a doctor who got his hand crushed in an accident and wasn't able to perform anymore. I think he was a dentist, and he wasn't able to perform anymore. And so he thankfully had a disability policy because he wasn't able to operate again, and so that disability policy was able to replace portion of his a large portion of his income, so that him and his family would be able to maintain that same quality of life that they were used to as well. So two different policies, two different coverages for different purposes, but kind of all aligning in the same things that it's often overlooked. You don't really think about it, especially when you're young. We think we're invincible,
Mm.
but the risk is always there. So
Understood. Thank you. Okay, so the last question I have here is what could you tell us in terms of avoiding bad advice as far as insurance is concerned? Like, is there anything to look for when what constitutes as a bad advice for typical insurances?
this is the cheapest rate. That's usually that's usually what I see in most of the reviews. Hey, here's the cheapest rate. And most people, when they usually come through our door, they're like, hey, can you beat this rate? And usually, we'll go through it and review it, and we'll usually our advice is, okay, here's what you're paying. this is what you're paying for. Did you know that this doesn't cover this? Did you know that it doesn't cover that? And so I would say the biggest red flag is going for the cheapest option, because you get what you paid for. You know, a lot of policies or a lot of agencies or a lot of agents tend to just, you know, they want to win the business, and you know, while rate is important, right? You don't want to be overpaying if you don't have to, but making sure that but knowing what you're paying for is important, is just as important, right?
Hmm.
And weighing out those options, right? Am I willing to pay for my own water damage? Am I willing to, you know, if there's an earthquake, am I willing to, you know, maybe the chances are really small, I'm willing to take that risk, right? So know exactly what you're paying for before you purchase the policy, I would say, is my biggest advice. And if you don't know, if you have an agent that's not willing to sit down and go through the policy coverage by coverage, then I would suggest looking somewhere else. You know, there's 1,000 of us, and so you know, it's always good to find an agent that's willing to sit down and not rush this process with you.
Great. No, that makes sense. Thank you. All right, so I don't see any more questions, so we will call this a wrap. Thank you, everyone, for being a part of the conversation today. We'll continue to bring experienced voices through this series, and we look forward to hosting our next one. You will hear from us on our next topic and the guest. This webinar will be available as a recording. We will publish that and make that accessible to you. This would also be available on our social media channel, specifically YouTube. Thank you and have a great evening.
Thank you, guys.